Watching this video, you can understand what Forex trading is and how you can use it to multiply your income by some simple examples. There are a lot of videos on YouTube which will take at least an hour of your time, but you won't get a clear understanding, so what am I supposed to do with all of this? My name is Caleb and I have structured all of the important information, and I will tell you what you need to know to get into trading and what opportunities you have to make money already after watching this video. For beginners, Forex can be interesting as an easy way to make money because it allows you to start with a relatively small investment. One of the reasons why trading appeals to many people is because of its accessibility. You can trade anytime and from anywhere. All you need is to have an access to the internet, and you can use computer or smartphone as the same. So let's start with the basics. Remember, at Forex we don't buy anything, we just trade currency contracts. Here are the same general rules as in all trading. We earn money on the differences between the prices we buy and sell. In essence, we simply place a forecast for this or that price movement. So how and what do we earn? How do we calculate our profit? Let's take the euro-dollar currency pair as an example. The first currency in this pair is euro. It is the base currency. The second currency is called the quoted currency. The ratio of these two currencies to each other today is nearly 1.1. There are 5 digits after the dot, but as you can see, they change all of the time. For example, we opened a trade and the price is 100 pips. Let's say that we opened the trade to go up, so let's take 1.1 and mark 100 points. This movement takes us just 100 points. The price was at this level, and after 100 points more it becomes at this level. I hope everything is clear here. Because of the fact that the size of our position is 1 lot, then 1 point of movement is 1 unit of profit of the base currency. In our case, it is euro. So accordingly, on a trade with a movement on 100 points, we earn 100 euros. On a trade with a movement of, for example, 255 pips, we earn 255 euros. It works in a case where the size of our position is 1 lot. Now the question is, how much is 1 lot? 1 lot is 100,000 of base currency. That is, in the currency pair, to open a transaction with a volume of the 1 lot, we must have 100,000 euros. But I think you will agree with me that not everyone has 100,000 euros. Therefore, when we're trading through brokers, we open accounts where leverage is used. For example, leverage of 1 to 100 gives us the opportunity to deposit our own money 100 times less than the lot size. It means that only 1,000 euros will be enough for us. With a leverage of 1 to 1,000, we need only 100 euros. The rest of the volume is covered by the broker through which we trade, and many brokers also give the opportunity to open a trade with a volume of less than 1 lot. It can be 0.1 or 0 lot. So purely technically, with $1,000 leverage, we can open a trade even with an amount of $1. This is just a theory for your understanding. There are special calculations with the help of which we can calculate the volume of the position depending on the risk and loss that you lay down. So the very first thing we start with is analytics. For analytics, I often use a TradingView service. Here we can choose any asset we need for trading and analyze in charts. Basically, traders use technical analysis for analytics because this analysis implies only working with the asset chart without taking into any account macroeconomic factors, financial news, and a lot of other instruments. My friends, before I make a review of a very simple and obvious trade which could bring profit to each of you, I want to warn you. All viewers who are watching me right now have the ability to copy my trades automatically. You don't need any skills or knowledge to do this. You can start with the simplest profit tool to earn or build up your capital, and then use it to the trade on your own or for any other purpose. So if you're interested in increasing your deposit by copying my trades, just write me at the link of the description of this video. So returning to the situation, first of all, we include the candlestick type of chart. The time frame of 1 hour means that one Japanese candle is formed exactly 1 hour. This is 1 hour, this is already 2 hours, and this is 3 hours, and so on. In the details of candlestick analysis and the Japanese chart, we will dive into more detail in the next videos. Now I want to show you by example the simplest trade and how much we can earn here. So I will add one indicator that will help me in the indicator of automatic support and resistance levels. So now I will explain you what it means. Let us customize it a little bit, increase the period to 50 so that we have more global levels. Look what we have here. We have several types of movement in the market. These are trend movement and sideways movement. The trend movement can goes down or goes up. Sideways movement is a movement within two levels. We have for example an an upper level, which the price hits, and a lower level, from which the price also bounces. And when the market moves between these two levels, it is called a sideways movement. It should be understood that the most profitable and the biggest trades are made during trend movements. But when we have a good range of sideways movement, we can also make money trading from support and resistance levels. As we see that the support level is green at the bottom, that the resistance level is red at the top. The indicator has automatically drawn it to us. So let's wait until the chart comes to the resistance level or until it comes to the support level. Just one of the two. So as we see, the chart comes to the support level, touches it directly and bounces it a bit. Basically right now we can think about entering into a position. So let's take the long position tool. Here we have an entry point, potential profit is touching the resistance level, and a stop loss, it is a trade which limits our loss. If the market does go the wrong way, we can set a stop loss position at this level. Here we have the last minimum value. Let's extend the stop loss to here. Now to open a trade, we need to calculate the size of the position. We have an entry price, we have a stop loss price, and we have a take profit price. So take profit is an order which automatically closes our position if it is in the plus and a certain price. Look, when we open a trade, first of all we pay attention to the size of this stop loss. Here we have 24.8, so it is 25 points. Then we go with you to the site babypips.com. We open the position size calculator here. Next we need to select the euro-dollar pair and the size of your balance. For example, I have a balance of $10,000, just assume. Here we choose as a percentage of the balance the amount we are ready to lose. For example, I'm ready to lose $1,000, so the 10% will be my loss. And accordingly this, here we have 25 points and we write it here. The position side we have a standard lot and it is 4. I have a leverage on this broker 1 to 1000, so I take a standard lot equals 4. In most cases we will pay attention to the standard lot. After that, to open a trade we must register on a trading broker. So if you need a broker which works in absolutely any country with the best conditions, you can also find a link to the trading platform in the description. There we also create an account, and with the help of the MetaTrader 4 app I can open trades even from my phone. I also have this application on my computer, so we go to the charts, add the code of our broker, it is euro-dollar pair, and I choose ESN account because I trade on this type of accounts. We will not go into details right now, we just press the trade button. We can open a position right now using a market order. It means that the order will be executed right now at the current price. If we want, for example, to open a position a little bit lower than, for example, we choose where we want to open it. The price is written here and just enter it here. So we choose the limit order, we are buying now and enter it here. We also enter our stop loss and take profit. And don't forget about the lot size. In my case, it is 4 lots. After that, we press the trade button or any another button and position is opening. So now let's look at the result we could get with this trade. By the way, the automatic indicator sent us a buy signal, which means that reversal is confirmed, and it adds some confidence that the trade will reach our goal. That's all. So we have about 4 days for the movement of open to the moment of closing the position. This is an hour time frame and it is quite a confident good trade. Now let's calculate how much we could earn on it. Remember that the opening price was like this. The difference between the opening price and the closing prices is 767 pips. So on this position, because of the fact that I have a position size of 4 lots, we could earn approximately, if 767 multiplied by 4, I think it is somewhere around 3,000 euros. So well, respectively, translating into dollars, it is about $3,300. So we would earn it from this position. A very simple analytics, a very simple trade within the framework of the sideways movement, a good entry point and a clear exit point. So today we have understood what makes us earn or lose money and how to correctly find such a situation which is more likely to bring us profit rather than loss. I will tell you in much more details about where and how to open trades correctly in the next videos, so subscribe to my channel just not to miss anything.